Thanks for staying with us on SABC News. Let's take a look at what's moving markets locally and internationally. We start in Asia, where Hong Kong shares closed down today, dragged by a slump in index heavyweight Alibaba Group after it scrapped plans to spin off its cloud business, while China's stocks struggled for direction. Other Asian shares took a breather as a batch of softer US economic data took some of the steam out of Wall Street, but also boosted bonds in a big way, while slugging oil prices in a boon for the inflation outlook. So Hong Kong's Hang Seng Index dropped 2.1%, the Shanghai Composite Index edged up 0.1%, and Japan's Nikkei added 0.1% as well. Over in the United States, the Dow Jones Industrial Average closed down slightly on Thursday, with pressure from Cisco and Walmart after disappointing forecasts. Wall Street 3 main indexes had advanced in the 4 prior sessions, with data signaling cooling inflation there and fueling hopes that the US Federal Reserve is done with those interest rate hikes. So the S&P 500 gained 0.12%, the Nasdaq Composite Index gained 0.07%, and the Dow Jones Industrial Average fell 0.3%. Closer to home, the JSE is in the green this afternoon. The all-share index up 0.33% at 73,941. Industrials up by the same margin, and the resources index just under 1% firmer. Markets in Europe are also higher today. Britain's FTSE 100 has gained 1%. The CAC 40 in France and Germany's DAC are 0.9% firmer. Looking at commodities, gold's trading at $1,991 an ounce. Platinum at $903 an ounce, and a barrel of Brent crude oil at $78.24. The rand is trading at 18 rand and 27 cents to the US dollar, 22 rand and 72 cents to the pound sterling, and 19 rand and 85 cents to the euro. Let's get some analysis on those numbers. Warwick Lucas, the head of Galileo Securities, joins me. A very good afternoon to you, Warwick. Let's start in the United States. Softer US economic data coming out, which slowed Wall Street's momentum a little bit. Tell me about that.
Yeah, so we saw the jobless data, which is a relatively firm, albeit narrow snapshot of what the job market's actually doing. Now, for quite some time, the US job market has been really, really strong. But with this and other data, I mean, we've seen a little bit of weakness creeping in as the economy's added fewer and fewer jobs each month. Now, a decrease in job numbers obviously signals a loosening in the labor conditions, which would then challenge the Fed's view of rates being high for longer. But it is important that if growth falls too hard, then the pendulum swings the other way, which takes the prospect of a soft landing off the table. So hence, I think some initial caution coming through there in the market, but I think there's probably going to be a sense coming through that actually this is a time when things are actually coming to a stable kind of level, and we'll start seeing the data coming through that will give the Fed some fresh direction to work with.
All right, let's move over to Asia. The Bank of Japan's Governor Kazuo Ueda said that they will discuss strategies for moving away from its ultra-loose monetary policy. Why? And did that move markets in Asia in any way? And then also, Warwick, while we're there, just broadly discuss with me what else is happening on that side.
Okay, so I think with Japan, we've seen Japanese inflation creeping back there slowly, just ever so quietly coming back in, and also the yen forex rate very, very weak. And so for the first time in a long time, it's actually pertinent to start talking about tightening in Japan. I mean, if most people might remember that Japan used to be this export titan that would continually run these massive trade surpluses. Well, the last year or so, they've actually been running quite big trade deficits. So there's a bit of a sea change going on there. Now, I think with China struggling, other Asian players actually aren't that happy to see the world's number 3 economy, Japan, pulling back. But they've got to respond to their specific circumstances. So the rest of Asia obviously watching that with a little bit of caution. Not alarm, but a little bit of caution.
All right, so if we speak of central banks, ECB's Christine Lagarde, I saw headlines earlier on saying there needs to be a rule book for capital markets, also commenting on startups that size. So just take me through what's moving European markets and how closely maybe people are watching statements like from Christine Lagarde.
Look, I think Christine Lagarde's statements were quite wide-ranging, quite a lot of it pointing towards structural issues in that European economy. So I think one of the things she pointed out was that there's been a continuous decline, or will be a continuous decline in the European working age population set to start in 2025, which means that that's a bit of a supply side problem that's going to come through, and that's the early edge of the demographic problem that might long have been spoken about in Europe. One of the answers that she had to these prospective shocks coming through is that you need massive investments in that economy to be able to handle a declining workforce. And her other comment was along the lines of the global economy fragmenting into competing blocks, which in an environment of high energy costs and so on makes sense. I mean, if you think about the cost of an air ticket from Joburg to London in the last few years, it's probably up by a multiple of 3 times from, say, 2018. But other factors in terms of the European economy, I mean, recent forecasts from the EU Commission downgraded the area's GDP growth outlook to just 0.6% per annum this year.
Mm-hmm. If we come closer to home, Warwick, the JSE in the green a little bit earlier on, take me through the JSE movements, and then also we're waiting for the S&P ratings review a little bit later on. I know it normally happens after the markets are closed. What are you expecting there?
Right, so I would call the JSE and pretty much on a kind of watching pattern today. I mean, we're seeing firmer metals prices and a slightly firmer rand have led to a moderately better market. I mean, the earnings season will be drawing to a close as well. But again, local earnings are sort of seeing some pressure from the disastrous Eskom and Transnet performances still coming through, and that needs to come to an end. I think in terms of the S&P ratings review, I think most of the problematic issues are quite well ventilated. I mean, sure, in the case of South Africa, in the medium-term budget, we sort of front-loaded news by comments from government that the money chest was bare, but counterintuitively, that actually means that the issues have been embraced, and it's putting government on the right footing to do what actually has to be done in the wake of problematic finances. But external players will be watching the state of our public finances, the progress in stabilizing that critical infrastructure of particularly Eskom and Transnet, and also with some interest, I think, the progress in the recovery of the Chinese economy, because we are, after all, commodity exporters, and they're our most important trade partner from that point of view.
All right, Warwick Lucas, the head of Galileo Securities, thank you so much for your time on SABC News this afternoon, just giving us commentary on local and international market movements.